Welcome, everyone. If we move to the next page. Yeah, one more. Okay, perfect. So I'd like to welcome everyone to today's webinar, which is about a spend category that invites a lot of scrutiny, but is rarely assessed for overall competitiveness. At times, I'd like to believe for the right reasons, but many times we've seen buyers actually leave money on the table just because they did not use the levers available to them to get a much better deal. And that's precisely what we're going to be discussing today. In terms of the discussion points, we'll start off with a view on the professional services landscape, following which we'll cover some core actionable strategies to maximize value before getting into a forward-looking playbook, which would cover, how could a discussion be complete without it? The potential impact of AI on professional services commercials. We also aim to keep the last few minutes focused on answering some of the questions that come through the session. Okay. If we move to the next page, I'll take a minute to maybe talk through a few considerations and some definitions. So we've already mentioned that this is a high spend category, which is seeing a lot of scrutiny. It also happens to be quite fragmented, right? Which leads to low visibility as to where things are being spent. There's a lot of spend which might not even go through a formal procurement process, etc. Plus, in many cases, there are opaque commercial constructs which could make things hard to negotiate or assess. So a quick set of definitions you can see on the right. I won't go through them in a lot of detail, but in terms of the core consulting categories, the ones in scope here are technology consulting, which is the architecture advisory, operating model redesign, data modernization, etc. Business process and change management. Think of the broader, business consulting, the typical big four kind of services around shared services setup, people, workforce analytics, finance transformation, talent model transformation, etc. Strategy consulting, self-explanatory. The two other elements, which are kind of, broadly covered in these themes are around assurance and tax advisory services. And then if we flip it over, the ongoing services, which we call managed services within professional services around financial crime, global mobility, third-party risk management, etc. So that's kind of, a little bit of the context setting and definitions so that you know that, hey, whatever trends we're talking about, generally are for these kinds of services. With that, let's start off on the next page with a poll, right? So the poll should be live now. What is your biggest challenge managing professional services spend? I'm sure there's more than one challenge, but if participants could use the options to start filling up, okay, we'll give it a few seconds, or till the time about 50% folks have answered. So seems like Kunal and Rahul, this seems to be pointing to potentially more business for us, right? Limited access to market pricing benchmarks. What do you say?
Absolutely, Abhishek. So the availability of benchmarks for some of these functions tend to be scarce, especially if we talk about the managed services areas like TPRM, global mobility, financial crime, because first of all, not many suppliers to it. The rates
Yeah.
could vary across contracts. And even for consulting services, several providers have their niche and specialities, which makes, a like-to-like comparison pretty difficult.
Yeah. Yeah. Okay. Good. I think we have quite a few of the updates. Let me share the results. So as we can see, a good almost 60% is around limited access to benchmarks, which I think we knew in our minds, and then also no standard roles. This is just so a sense of deja vu. Actually, in many almost every conversation, there's just all kinds of rate cards, MSAs, non-MSAs flying about. Anything which comes to your mind, Rahul, quickly before I know you have a set of insights on the next page too, but any observations based on the poll results?
Well, I think interesting poll results, right? I think one of the things that based on our discussions, right, regular discussions with a lot of the consulting category managers, right, has been around lack of visibility of some of the consulting spend, right, and I did see relatively lower numbers there, so that was a bit surprised, but yeah, again, a lot of other things do make sense,
Yeah.
right? We do have some of the insights to share, right, and again, this group does believe that the overall marketing specific price benchmarks, right, is something that we should look at. However, if based on our research, right, that we have done in terms of some of the buyer challenges, especially in the professional services, the biggest challenge, right, that has been articulated is essentially the lack of visibility into the overall consulting spend. So there is no spend baseline to start with. As some of these spend might be tracked under different categories by different departments, or worse, it might be executed by some of the enterprise buyers without actual involvement of the procurement. Right? Another challenge that we have observed is the overall lack of visibility into the consulting spend. Right, there are generally, and I'm talking more from the consulting category here. Right, there are generally no defined linkages between the overall service provider fee versus the business outcome, or even the key success criteria of that consulting project. Right. Um, as a result, there is no effective way to kind of analyze, right, which provider is adding more value versus others, right? And something that you already pointed to, right? The consulting spend is not regularly benchmarked because of lack of the external availability benchmark data on consulting compared to some of the other categories, right? The BPO services, IT services, etc., right? Where there are multiple people play into, right? Which actually makes it quite difficult and challenge difficult to kind of challenge the supplier pricing and even efforts, right, in any given SOW. And lastly, we also observe the role structure is not standardized, right? So some providers actually use a 5-level structure, some would use like a 6-level structure. Some of the MBBs we have seen, kind of adopt a weekly blended model, and this is often without the transparency into the overall effort or delivery locations which are used, right? Which makes a bit challenging, right, for the overall buyers, right? So again, these are some of the top challenges that we have observed based on our research. Now, having looked at some of the micro challenges that the buyers are facing, in the next page, we can actually look at the overall macro environment, right, that we observe in the consulting market, right. So if you see the graph on the left hand side, it essentially shows the revenue growth of some of the major consulting service provider in the last 4 years, right? And you can clearly observe, right, that the growth story that actually existed earlier has shifted significantly, right? Most firms that delivered strong double-digit performance in 22 and even in 23 time frame, right? They actually saw a stark slowdown in 2024, right? And quite frankly, right, even in H1 25, we are seeing some similar trends, right? Though the revenue figures are yet to come by, right, for a lot of providers, but we are kind of seeing the same trend, right? Let me actually bring in Vaibhav here for a deeper analysis. So Vaibhav, what are some of the ground level shifts that you are seeing from a market standpoint?
Sure, Rahul. There are three things worth calling out. First is some of the tier two and specialist firms have outperformed the big four over the past 12 months when it comes to revenue growth. And the reason is the buyers are seeing value in these firms, not just in terms of cost, but also due to their positioning around domain expertise. Second trend is there is an increase in insourcing, where enterprises are scaling back external support for recurring, less strategic projects, for example, program management, HR policy overall. And third trend is the demand for technology consulting has stayed resilient. And this is largely due to an increase in AI-led transformation initiatives. To summarize, while growth may be cooling down, the market is opening up in new ways. For service providers, it is time to relook at the pricing and the delivery models. And for enterprise, there's a perfect opportunity to engage on more competitive terms. As we move on to the next page, we will look at how these trends and shifts are showing up in the pricing. Starting with strategy consulting, and this is where we are seeing the most visible pricing pressure. Rate cards are being challenged across the board, though service providers are responding with leaner teams and shorter timelines. The trend here is clearly downward. Business consulting is a mixed bag. Prices have dipped in some areas like operating model design or change management, but also remain stable where work is more data driven, like analytics or process transformation using AI. But at an overall level, we expect a broadly stable or muted negative pricing environment in the near future. For technology consulting, by contrast, the demand, has stayed resilient. The rates have been steady, and in some cases, we've also seen increase in the prices for technology consulting, and particularly in the areas around Gen AI, data platform, and architecture advisory work. Kunal, can I request you to take us through what's happening in the rest of the stack?
Sure, Vaibhav. So if we look at risk and assurance services, they have exhibited relative stability with a slightly upward bias in price movement. Providers have successfully justified stable to rising rates, particularly at offshore locations, on account of increased demand for compliance, cyber risk services, etc. What we expect going forward is the offshore price would increase as the organizations are focusing on overall cost rationalization and prioritizing risk mitigation as well. So to meet the SLAs and the expectations from the enterprise, the price would increase. On the tax advisory services side, again, they show robust pricing trends in terms of price increase at offshore and even onshore locations. The reason being that the demand for complex advisory, regulatory compliance, deep domain expertise is growing. This is also because of the Gen AI era that we live in. Most of the transactional stuff is getting automated. So the blended ADRs are increasing for such complex, intensive functions. We anticipate sustained upward pricing due to heightened regulatory scrutiny as well. Finally, when we touch upon the finance and the HR managed services, there's a lot of competition in this area, and the prices have gone down at both onshore and offshore location. Enterprises are demanding efficiency gains. Providers are proactive in proposing those as part of their proposals, as part of the signed contracts. And we believe that the pricing pressure would continue in these service segments. With that, let's move on to the next page where we explore some of the key implications of these pricing trends. Okay, so firstly, I would say that the providers today are becoming more commercially flexible, and it's about the times we live in. This year has been sticky in terms of market growth, in terms of competition. And enterprises need to seriously question whether they are paying the right amount for their outsourced services, be it managed services, be it consulting categories. And it is essential to reassess and ensure that optimal value is being passed on to them for the future term. Secondly, the providers are increasingly open to performance-based arrangements, co-investment models. The traditional models are being questioned in terms of what's the skin in the game that the providers are committing to as part of the contracts. Now, such models can help align provider interests closely with client strategic objectives. Most of the established firms have moved towards hybrid commercial models, driving shared success for the enterprise and the provider. Additionally, the competitive landscape is shifting. We see a lot of tier two and specialized providers entering into the market space with niche and differentiated offerings. And that entire proposition is challenging the dominance of Big Fours and the MBBs as well. On the solution side, generative AI and AI are changing things in terms of the traditional pyramids are being looked at. The shoring models, onshore, offshore, nearshore ratios are being relooked. So everything on the solution side is undergoing a marked transformation. Right staffing and optimal shoring strategies have become more critical than ever. Abhishek, I would love to hear your perspective on this, especially around the growing demand for transparency in pricing. A lot of enterprises are looking for more transparent pricing structures. What do you think enterprises and providers should prioritize right now in response to these trends?
Sure, sure. So, Kunal, a couple of things. One, I think there is a lot of questioning by enterprises, even in fixed price contracts, as to what the overall delivery structure is going to be, how many people, pyramids, time spent, etc. So, I think it makes sense for providers also to have some things, at least an estimate handy, because without that transparency, it's not going to come through. Because this is a lot more about the experience, the overall sort of trusted advisor, scope which comes. The second level of transparency, which increasingly I'm seeing clients asking, is that, hey, with the whole generative AI aspect, and there are clearly some areas where a lot of generative AI, can be used within the consulting professional services space. Who partakes the benefits and how much is being transferred, etc. So there's also a lot of transparency being asked around that. So it's pretty important for buyers to keep on asking and prodding, and even providers to be a bit more open. And in my mind, I think that's going to be a differentiator when it comes to overall transparency and authenticity in kind of declaring how generative AI and the overall staffing plans are going to be delivered. Okay. All right, let's move to the next page. So we've covered the first section, right? And with that, let's aim to look a bit forward. What can be done to maximize commercial value, right? So we'll take a look at a few actionable levers for your consideration, right? And on the next page, I'd request Rahul to start with some of the areas where we see maximum value leakages. Rahul?
Thanks, Abhishek. Right, again, some of this is what we have observed while benchmarking some of the consulting spend for our clients, right? So I'll talk through some of those top value leakages, right? So firstly, a lot of consulting projects which are contracted don't actively involve some of the procurement teams, right? Especially in some of those negotiations which are going on, right? And this leads to multiple issues, right? One, there is a lack of RFP, or that competitive evaluation uh, is completely kind of avoided, right? In some of those scenarios, this also leads to kind of piecemeal negotiations at a smaller scale, and more managed like a tail spend, rather than centrally looking at a overall global level, right? Some of those things, and also some of the suppliers are kind of charging differently at an SOW level, which may not be aligned with the overall global MSA rate card, right? Which again the procurement team would have access to, right? And again, this eventually leads to the overall non-standardization issues, right? In some of the consulting contracts, right, that we essentially talked about earlier, right? So it's imperative, right, that the kind of procurement teams get involved in some of these consulting spending to essentially manage this space better. We also observe some of the large number of consulting SOWs across our clients still on a fixed fee pricing, right? Or in case of MBBs, it's in a kind of a blended weekly fee kind of a pricing, right? Which essentially means there's no transparency around the type of resources, delivery location, or even the efforts, right, of people who are going to be involved in that consulting project, right? As a result, many are overpaying significantly compared to the market, right? And in some cases, the centralized negotiated rate card, kind of doesn't exist at all. In cases where it kind of exists, it's actually quite oversimplified, right? Clubbing multiple consulting categories, which are actually priced differently, right? And again, leading to that overall, value leakage in the spend. So now that we have looked at some of these, value leakages, what we should essentially do to plug them, right? I'll again, lean into Vaibhav and team to talk through some of those levers that we could potentially use. We can go to the next page.
Thanks, Rahul. And that the slide that you discussed really sets the stage. One of the biggest contributor to those value leakages is how rate cards are structured. And that brings us to lever number one, which is about rationalized consulting categories. And we often see two extremes. On one end, you have your oversimplified rate card structures where broad categories blend in high and low complexity work, which really inflates the averages and make benchmarking nearly impossible. On the other end, you have your overcomplicated rate card structures with too many micro categories that really fragment the spend, dilute negotiation leverage, create role duplication, same role under different titles. And neither approach gives you complete control. What we recommend and have implemented with multiple clients is a balanced market aligned structure. For instance, in one recent engagement, our client moved from just four broad categories to six sharper ones. And this realignment clarified over 40 functions and allowed their procurement team to negotiate with far more precision. To summarize, if your rate categories are too broad, you're overpaying. If they're too fragmented, you're losing leverage. And getting this right is foundational. Abhishek, let me bring in you to talk about how we are supporting the buyers today as we move on to the next page.
Yeah, absolutely. Thanks, Weber, for the description on the rationalized categories. I do recognize, it's hard at times to know what good looks like. And today we do have a special offer for buyers, right? We have one professional services contract reviewed by our team if you are commercially competitive along with insights on the rate card structure. So this is an offer. To request the complimentary review, please click the link in the chat, right? And we'll be happy to coordinate with you to figure out how we can help you, right? And this includes a quick summary of the findings, the gap areas, as well as a walkthrough which we'll do to explain and articulate and have an interactive session. Okay. With that, let me hand it back to Kunal for lever number two to maximize commercial value.
Sure. So the lever number two is about maximizing the value by using hybrid commercial models. So on this page, you can see a list of output-based pricing metrics, outcome-based pricing metrics. In essence, the enterprises today see clearer pricing, which are tied to tangible deliverables and measurable business results. Gone are the days when you can simply do away with a T&M model in a consulting or a professional services engagement. Output-based metrics offer predictability and transparency, clearly defining exactly what enterprises pay for. So for example, per KYC or customer onboarded, per tax preparation or tax review. On the other hand, the outcome-based metrics directly align service provider incentives with strategic business results, rewarding the achievement of targeted goals. For example, let's say reduction in false positives in financial crime. Now that's a business outcome, that's a KPI, right? So we will just provide you a few seconds to go through this list before we move on to the next page, where Vaibhav could just take us to the lever number three in our strategies to maximize value. Allow a few seconds for our audience to just go through this list.
Justin, I think
Okay,
we need to move it to the
yeah.
next page.
Vaibhav?
Yeah, Justin, as
Yeah.
we move on to the next page.
Yeah, move it to page 17, please. Yes.
Yeah.
Vaibhav, over to you.
Thank you, Abhishek and Kunal. While pricing model innovation is one way to unlock value, another equally important lever is reevaluating who you're buying from. And we are observing a clear shift in the market. Enterprises are rebalancing their vendor portfolios. For buyers, the motivation is straightforward: greater price transparency, which is sometimes hard to get from your traditional players like MBPs with bundled or blended rate card structures. And then you have your increased scrutiny on global delivery models, and especially in those scenarios where offshore work is priced at near onshore levels. And most importantly, a shift towards a specialized expertise over brand equity. Now for the service providers in the room, this is a clear signal. The buyers are building more diversified ecosystems. That means the competition is no longer just the other large players, it's also mid-sized firms bringing in sharper domain depth positioned by expert SMEs, expert partners with more flexible pricing. So, in summary, whether you're a buyer or provider, the message here is the same. The vendor mix matters more than ever, and value, not brand alone, is driving the decisions. Next, I'll invite Rahul and Abhishek to discuss the role of procurement in sustaining this shift as outlined in the next page.
Thanks, Vaibhav. Yes, the role of procurement team cannot be undermined. So we have seen that with an active procurement involvement, at a global level, it can lead to a saving of almost 5 to 15% on your overall global consulting spends, right? So what immediate steps, right, as a procurement team you can take. First, centralize all the consulting spend in your organization through the procurement policy, which requires a procurement approval for any consulting related spending. This will prevent some of the stakeholder led tail spend behavior, and it will kind of move into a more enterprise level vendor negotiation strategy, right, which essentially procurement can lead. Second, try to establish a process to screen all new SOWs for the alignment or rather misalignment with respect to the global MSA rate card, right? And some of this compliance will ensure a lot of savings, right, that you can drive. So anything SOW that goes through needs an approval, which requires some of the screening, right, that the procurement team can do. This can essentially help drive the overall standardization in the overall consulting category, and of course savings, right? So Abhishek, any other low hanging fruit that comes to your mind when it comes to the procurement team?
Yeah, Rahul, one of the things is that, category managers looking into professional services consulting at times can also add some competitive tension through either a mini RFP process of sorts, right? Now, this could be for either a significantly large project or set of projects coming through, or it could also be sort of, at a regular intervals, just kind of, setting the terms of engagement in terms of, hey, what's the rate card applicable? What are the discounts applicable? If there's a standardization which needs to be done on the rate card structure, etc. As you're able to then contract on negotiated rate cards or get additional savings through volume discounting mechanisms, this could be actually, considered quite well. So yes, having some sort of centralized procurement view always helps. While it may take a little longer than simply calling up, one's favorite consulting firm and starting, there are commercial benefits to this, right? Another one which is a good segue, if we were to move to the next page, is actually lever number 5, which is benchmarking and market intelligence. From the poll which we did also earlier on in today's session, it seemed that access to market benchmarks or insights is tough, and I wholeheartedly agree. Because for years, I've been in the industry, broader sourcing advisory-ish space for 22 years. So I can actually say decades, right? Benchmarking of consulting rates, solution metrics, or terms and conditions, hasn't really been top of mind for buyers, I'll admit. But having said that, those who do this, will be surprised how helpful this is in getting consulting firms to align with market best practices in terms of commercials. Now, there's multiple benefits, as you can see. The most important yet underrated one is actually, trying to figure out once you get not just the pricing, but also the solution reviews done to figure out, what the under or oversizing is, right? Okay. When it comes to senior leadership time, right? So especially with AI, if someone were to ask me what's really, really causing, a lot of questions from clients is, hey, does this mean that, we have more senior teams, right? Working on larger professional services engagements, and both too much or too less can be a problem depending on the scope. So getting this view is critical. So again, at regular intervals, conducting a comprehensive benchmarking exercise, not just across price, but also solutioning and how the overall engagement works. Good practices could be super helpful. Okay. If you move to the next page, so we are about to enter the third section for today, right? Which is about what should really be the way forward, right? Now, we've spoken about, artificial intelligence, what the potential impact could be, among other things, right? And let's begin this section again with a quick poll on the next page. Okay. So how are you incorporating AI into your professional services engagements? So we have four options. Let's see where we're getting to. It started off with we aren't yet being the highest, which was a bit surprising. So thankfully, that's kind of going down. Good to see that there's actively value being asked, right, from a perspective. So Vaibhav, I know these results are still coming, but what strikes you as the most interesting part of this part of this specific poll?
Yeah, I see a very good proportion of discussed internally, but it has not translated into sourcing decisions. I
Yeah,
think, yeah, procurement should take a note of that.
correct, correct. I think we're close to the. We can end the poll. Yeah, let me just share the results. So as we see, actively, seeking Gen AI enabled value in proposals. Absolutely. So I think that makes complete sense. Discussed internally, I see a couple of hypotheses around this. One, I think there could also be some concerns around, confidentiality of data. How AI, will it be used elsewhere, and especially for certain, very, highly sensitive industry sectors, this could be a problem. Yeah, I think the 14%, knowing that vendors are using AI, but pricing has not changed. Now, this should definitely change. We believe, and yeah, I think there is a question also which we'll cover in terms of successful use cases. Yes, depend in certain kinds of engagements, there is pretty successful examples of this impacting productivity, in a pretty major way. Okay. So, let's move to the next page, to actually understand how some of the AI elements are changing staffing models and productivity. Kunal, over to you.
Sure, and pretty interesting poll results also showcases the difficulties in understanding the service provider proposals. We have seen providers baking in their generative AI solution, but it's not explicit. The benefits are not explicit. The costs are not explicit. So it's kind of a abstract solution in the eyes of the enterprises. Okay, so let us now shift gears to discuss the impact of generative AI on staffing models and productivity in professional services. Now, as the poll also says, so generative AI has already started to reshape how consulting services are staffed and delivered. Generative AI is increasingly used to accelerate tasks such as research and market analysis, significantly speeding up industry trained assessments, research activities, etc. Similarly, in more of the data processing and analytics side, tailored AI tools are enhancing the data quality and insight generation, faster reporting, faster dashboarding, enabling the teams to focus more on strategic interpretation. Moreover, the document generation, review, and quality checks are becoming more streamlined through automation, reducing the time spent on routine tasks and allowing teams to redirect efforts towards higher value activities. Rahul, could you now highlight how these transformation shifts are fundamentally changing the staffing strategies? We have received a lot of queries from our clients to understand the solution impact. How's this impacting the staff's billability in the consulting space?
Thanks, Kunal, and great question, right? And probably one of the top of the mind questions, right, for a lot of enterprise buyers, right? So, firstly, not all the consulting providers are actively positioning an AI-led efficiencies in, especially in their pure consulting engagements, right? We do see when it comes to some of the managed services areas, right, or BPO and IT, right, is being kind of positioned, looked at. But when it comes to the consulting contracts, there's still, a lot of consulting providers who are not kind of actively positioning, this. And some of the efficiencies, as you rightly pointed, right, a lot of efficiencies do exist, right, which they are currently, driving more value, right. Those are, going into either, spending those times in additional analysis for the client, or, essentially leading to a margin expansion or improvement, right, for some of these consulting providers. However, many are relooking at their staffing models, and especially, there is what we see is a more movement towards top to middle heavy pyramid, right, and trying to gradually reduce some of those, junior headcount, roles. If you look at some of the news, a lot of the big fours, right, are, looking at their overall hiring strategy, right, especially at the lowest strata, right, and trying and reduction in, additional hiring, right, from some of the new colleges, etc., right. That's something that, we are seeing, right, in terms of a change to the strategy, right. Also, providers are often adding some of a higher senior leadership billing, right. I think Abhishek did mention some of those elements, right. So the junior roles, right, there is, some trimming happening there, right. However, some of the senior leadership billing is what, we are seeing an increase, right. So essentially trying to add more expertise, and kind of adding more expert partner time, which essentially means that you're trying to drive more value, right, as part of that consulting project for your end clients, right. That's something that we are seeing some of the providers do, and which essentially reminds me of one of the recent work, right, that we have done with a PE firm, where we observed, I mean, we were able to visibly observe an AI impact, right. If we can move to the next page, essentially, it kind of covers, this particular example, right, that I was talking about. So actually, we kind of regularly support a lot of our, private equity clients to benchmark their, consulting SOWs, which are, generally a quick turnaround, so as to say. And by chance, what we observed, that there was a similar benchmarking work, right, that we had done in 2023, right, which we again, just recently delivered, right, earlier this year. And, this particular, consulting project, right, was essentially a kind of a commercial due diligence work, right, which that PE firm, was looking to do on a logistics asset, right, that they were targeting. And they're of course seeking, this CDD exercise through a regional, strategy firm, right. So essentially what we did is we compared the overall, staffing pyramid in 23 versus, the similar, deal that, again we benchmark in 25. And, we observe some interesting changes, right, which we want to call out, right. And again, seems like a lot of, Gen AI efficiencies were essentially, baked in, right, in this case. So we observed that the junior roles like associate and consultant, as you can see, were kind of trimmed down because of some of these efficiencies, while we observed a marginal increase in the utilization of some of the expert partner which are focused on this logistics industry, and even the senior partner, right. So clearly the fee was not reduced. However, the provider was able to add more value by bringing some of these senior expertise into the project, right. Again, Abhishek, you were also part of this engagement. Any other observations you have?
Yeah, rather again, the work, if we look at it, right, and this is just one of the use cases, and by the way, it can't be universally applied. Different engagements are of different kinds, but this work is highly analytics intensive, right? So there's a lot of mathematical analysis, number crunching, where of course, specialized AI tools which, consulting firms have developed can really help, right? There's also if we look at the scope here, there's also significant effort which generally goes into report preparation, right? Backup data, articulation, right? Yes, even, so that can be helped by Gen AI. And I think, overall, if even if we were to look at outside of these two things, the overall power of AI in summarizing key messages, summarizing, the implications, highlighting, patterns which could point to some sort of a, commercial due diligence risk, really just helps through, with reducing the actual human effort required. So the human effort is mostly focused just on figuring out, A, to make sure that the analysis is correct, there's no errors, and B, just to, focus their entire time on really, the high risk, insight driven things, which works well for everyone. Okay. Okay. Let's now move to the next page where I'd request Kunal to talk through, how this impacts commercial models, right? So we've talked a little bit about, the overall impact on, sort of, productivity, etc. But what about the models, Kunal?
Yeah, if we move to the next page. Okay, yeah. So of course, with the adoption of generative AI, the end trend, agentic AI, etc., um, the conversations have again focused on the value-based pricing, linking the fee directly to outcomes, etc. Now, we are seeing four distinct models in use right now. The first one is the value-based pricing, and this model explicitly links the pricing to the tangible business value delivered by generative AI, such as cost reduction through the tool itself, or even in some selective services, increasing the top line because of better analytics, better client account segmentation, etc. The second model is a capability to pay model. This is emerging. A lot of enterprises have distinct yearly targets, and they would like the providers to align to that year-on-year spend targets. Now, this kind of a pricing model is well calibrated to fit within known client budget constraints. Through the generative AI solution, some upfront cost savings would align the service provider fee to the targets. The providers adjust fee dynamically, upward or downward, to match affordability, making consulting engagements more accessible and sustainable. Especially the tier two and the specialist providers are known to smoothen out the fee and be more creative when it comes to the pricing, glide path. The third is, the fee getting linked to outcomes. And again, this is a bit different from the first model because herein we are also talking about experiential based metrics such as NPS score, customer satisfaction, and XLAs across different types of consulting professional services engagements. So in a way, it is outcomes, though more subjective and experience based. And finally, the last one is the traditional models are getting upgraded. So they are being evolved to incorporate premiums for proprietary solutions. A lot of service providers are monetizing their generative AI solutions, creating a different business segment in some cases. So providers are combining fixed or time and material model with additional charges for their intellectual property, assets, frameworks, templates, etc. Clearly positioning their differentiated value with a distinct ROI attached to that. Overall, these shifts indicate a clear evolution towards flexible, outcome-based models, value-driven models in consulting and professional services enabled by generative AI and now agentic AI. Abhishek, could you now take us through how mature enterprises are shifting from tactical buying to strategic orchestration?
Sure. Sure. Let's move to the next page, right? And there's a lot of text here. I'll let webinar participants just read through it. But again, there is a sort of a transition that we see from tactical buying to, as we may call it, strategic orchestration. So I won't go through each line, but maybe I'll cover the few which I believe are most important. One, of course, accepting provider suggested role structures and delivery pyramids, right? Yes, that might be helpful at times because it might give good ideas. But if there are multiple providers being used, getting some kind of consistency or standardized roles is helpful because even then this can be almost like an internal benchmarking to figure out who's charging what for what kind of resources, right? And this can be done through global MSAs for cost performance alignment. So that this is like 101 basic step. Right? The second element which I want to track is, which I want to mention is that, hey, moving from just R's and spend, what about outcomes, right? How about driving provider accountability by linking fees to business outcomes and client satisfaction? Now, sometimes the question we hear is, hey, by the way, it's so difficult to link, in many cases, engagements to outcomes. It's just either like high level strategy development or a program where it's very difficult to link to metrics. We've seen cases where up to 10 to 15% of the fee was linked to actual client satisfaction. And that, by the way, that is the one way to ensure that you get the A team always, because 15% of the fee, right, assuming it's priced correctly, is enough to put a very significant dent in the margin profile, right? So the moment something and by the way, the intent is not to earn money off the consulting provider. The intent is just to make sure that they put in their best effort and best team to get things done. So that's why it's really important to think about some of these provider accountability aspects, right? um, I think the last point I'll mention is just using or kind of just not pushing for delivery models which use AI, or not just questioning that, hey, what does the future look like? I think that leads to situations where potentially the vendor is using AI, but the benefits are not being passed on, right? So it's important to have an honest conversation about the embedded AI efficiencies, not just from a commercial perspective, but also about, hey, what are the risk elements? How's the data being churned? Is it, which models is it going to, right? So again, it's important to think of some of these aspects as we get to the role of or the persona of the strategic orchestrator. All right, let's move to the next page, which brings us to the close of the third section as well. So as we mentioned, we have about 10 odd minutes before closure of the webinar. What we'll try and do is cover some questions and answers. Thanks for sharing through. If we move to the next page, there's also folks who may not have asked till now. Please do feel free to ask. We'll take a few which we've received through the session or kind of early on. Let me start with a question around okay, what is the expected impact of AI on consulting pricing structures? This came through Vaibhav. Do you want to take this?
Sure, Abhishek. And this is a question that frequently comes up in conversations with both service providers and buyers. And yes, AI is poised to make a significant impact on pricing for consulting services. uh, there is a pricing pressure on downward pressure on traditional effort-based models. Models like T&M. Clients are expecting faster delivery, lower effort to show up in pricing, and they are proactively asking for discounts. So your traditional models like T&M, we'll see lot less traction in those. But at the same time, there's a real upside too. Firms can now price based on the value delivered, not just the hours worked. So that also works on the service favor of service providers. We're also seeing a lot more instances of hybrid-based commercial models, with flat fees, with success-based fees, or success-based bonuses. Subscription-based models are also on rise, where clients pay a recurring fee for both AI tools and expert advisory. We have also observed a few instances, and very recently, where service provider firms are also introducing digital labor in their proposals, to explicitly call out the value of AI, and sometimes charging for this digital labor as well. So on overall, outcome-based pricing is gaining strong traction, and especially where AI automates a meaningful chunk. So it's AI again, it's poised to make a significant impact on the consulting services pricing structures.
Sure, thanks, Vaibhav. Another one which came through today was pricing is routinely blurred between consulting and IT delivery roles. In this particular case, should rate cards remain purpose built, or is there benefit in mixing use cases like this one-on-one rate card? And this is a question we also get sometimes. And the answer actually depends, right? So if, for example, one of the, for example, if one of the scope is fairly small, right? And you'd want to kind of, say that, hey, let's just keep the rates, broadly consistent so that we don't need to kind of, do make changes. That's fine, right? But fundamentally, right, the problem with blending into one is that unless you're very sure of what the composition of each one is, the providers will try and bake in a lot of risk and assume that it's going to be using much more of the higher cost, resources. So that's why it can sometimes, leave money on the table. Our suggestion would be that, hey, in terms of, making sure that, the consulting and IT delivery roles and rates are kept separate, the job descriptions are separate, and also there's an agreement and a scrutiny or check on the provider that one type of resources are not being passed off as the other just because you're willing to pay. So that level of due diligence, I think, is again, fairly important. There was another one which came through around, and maybe Kunal, you want to take this, right? Are traditional BPO providers the right partners for deploying agentic AI? Interesting question.
Yeah, thanks, Abhishek. Very practical, pragmatic question. As enterprises question whether their incumbents or existing BPO providers could actually be agentic AI system integrators. So what we see is definitely the established traditional BPO providers are experimenting with agentic AI. Some of them, in fact, have been showcasing early implementations, promising business cases as they work with enterprise functional stakeholders. Now, their strengths definitely lie in process rigor, process understanding, scale to adopt, to support adoption, especially in well-defined operational areas. However, most of the others are still evolving their technical depth, partnering with other system integrators, improving their orchestration capabilities. And this also needs, the commercial model to be fully evolved to support, these autonomous agentic-led transformations. My view would be that they can be really valuable partners when selected carefully and paired with a clear transformation or a co-innovation roadmap. I would say the top three things that the enterprises should look for would be one, the proven use cases for the services in scope. Have they been doing this for other clients? Have they run pilots, for other clients? Second would be strong tech and orchestration stack. What's their implementation capabilities? What would be the accuracy of, their solution 3 months down the line, 6 months down the line? How do they plan to evolve their accuracy as they move forward into the engagement? And the third most important element would be how flexible are they in terms of the commercial and the pricing model? How does that fit in conjunction with the current pricing model that the service provider has with the enterprise? Are they ready to defer some of the cost, amortize some of the cost, link some of the cost to outcomes? Those are the very things that I would suggest the enterprise should question the service providers.
Perfect. Thanks, Kunal. I think we do have time for one more question. And Rahul, there was one around what services are BPO players adding AI to, right? How are they pricing their services around not just an FT model, but overall services solution. Would you want to cover that?
Sure, Abhishek. So yes, I think BPO services definitely, right, with agentic AI, right, Gen AI kind of coming into the play. We are seeing disruption, especially when we look at some of the proposals, right, on the BPO areas. So some of the functions that come to my mind is definitely CXM area, your marketing operations, even the content moderation, areas, right, where we are seeing, significant AI play being, added by some of the BPO players or IT BPO players rather. And some of the other areas like FNA, right, we are seeing a mixed bag, right, in terms of agentic Gen AI. Definitely there are, implementation that we see, but it's just that the extent, right, is probably a lot more in CXM, marketing and content moderation areas, right, that we are seeing. In terms of how they are pricing it, right? So, I mean, again, we have seen different approaches. I mean, the overall transparency, especially on the AI pricing, is kind of limited, which what a lot of the BPO players are doing, especially as part of a larger BPO engagement. So generally, those AI specific pricing is kind of embedded into the overall transformation fee, right? That we are kind of seeing, and essentially, yes, the ROI is definitely there in terms of the overall impact that we are seeing in FT reduction, or let's say if it's a fixed fee kind of a commercial model, right? We are seeing that the year on year decrease, right, in the pricing is something that we are seeing, right? In few cases, however, we are seeing the AI pricing, and I would say relatively in rarer cases, right, we are seeing the AI pricing is kind of completely, being transparently put out there. The ROI is kind of articulated quite well, and that's where we're actually seeing, a lot of enterprises are, going ahead, right, with actually including AI or even paying for some of those, AI initiatives as well, right? So it's a mixed bag, but currently the transparency is where it's relatively on the lower side when it comes to AI pricing. Abhishek and team.
Sure. Thanks, Rahul. I'm afraid that's all the time we have for questions today. If you move to the next page, I'll just take a few seconds to talk about Engage, which is our premium experience, educational, and networking event for executives in global business services, global sourcing, vendor management. This is scheduled for the 8th to 10th of September in Dallas. So, just wanted to, put it out there for our functional stakeholder enterprise colleagues. If you move to the next page, right after Engage, we also have our premium experience event, which is focused on leaders in sales, marketing, and strategy roles at service providers, B2B companies, to provide them all the intelligence and tools for growth acceleration. And that too is in Dallas from the 10th to 12th of September. Please do feel free to reach out to any one of us, in case you're interested to know a bit more. And we look forward to seeing you there if things could work out for you. With that, we come to the end of the webinar. Thanks so much for joining in. Have a great rest of the day, and you will soon get a copy of the recording and the document which we used as part of the webinar. Thank you, and have a great day.
Thanks, everyone.
Thank you, everyone.